Hey guys, it is Julie here with TipRanks, and today we're taking a look at Canadian Dividend stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we are looking north of the border to my homeland of Canada for some solid dividend paying stocks. Now don't worry, all of the stocks today trade on the TSX but also American exchanges as well. And they come with decades of dividend paying history. So we're going to be taking a look at these companies, their dividend details, and of course how the analysts weigh in on the stock's future. You can take a look for yourself over on the TipRanks website or by downloading the TipRanks mobile app by following the link down below. Now let's get right into these Canadian dividend stocks. First up, we're taking a look at Canadian Natural Resources. Their stock trades under the ticker CNQ on both the Toronto Stock Exchange and down here in the States as well. Currently priced at $58 American, the stock is up 12% year to date and has seen some growth this past week as well. Canadian Natural is an oil and natural gas producer with assets in North America, the UK, and offshore Africa. With a balanced mix of natural gas, light crude oil, heavy crude oil, bitumen, and synthetic crude oil, they represent one of the strongest and most diversified asset portfolios of any independent energy producer in the world. The company is the largest crude oil producer in Canada and second largest natural gas producer in the country as well. The company has 23 years of dividend payment history and annual increases to that dividend as well. Since they began paying that dividend, it's seen a 21% compound annual growth rate. It is a quarterly dividend of 67 cents per share for a dividend yield of 4.4%. Their next ex-dividend date is coming up on June 15th. They shared their most recent earnings report at the start of the month on May 4th, where they did come out with an earnings beat. Revenue for the quarter came in at $6.4 billion, and earnings per share of $1.25 came in ahead of analyst expectations by 3 cents per share. And of course, with a recent earnings report comes some updated analyst price targets. The Canadian Natural Resources stock currently has 7 analyst ratings, and overall comes in as a moderate buy based on 4 buy ratings and 3 holds. The average price target of $72 would be an upside potential of 24% for this next year. We can see some of those recent buy ratings coming in the last few weeks following their earnings report, with a couple holds from last month, but several recent buy ratings from 5-star analysts here too, which we love to see. Next up, we have the Bank of Montreal. Their stock trades under the ticker BMO on both the Toronto Stock Exchange and American exchanges as well. Currently priced at $87 per share, the stock is down nearly 13% over the past year. Founded back in 1817, BMO now has over $1 trillion in assets. They are the 8th largest bank in North America by assets, serving more than 12 million customers. They operate through 3 different groups with their personal and commercial banking, BMO Wealth Management, and BMO Capital Markets. Now, when you're looking for a solid dividend track record, BMO is hard to beat. They are the longest running dividend paying company in Canada. They started paying their dividend back in 1829. Their current quarterly dividend is $1.05 per share for a dividend yield of 4.85%. The company has a policy of paying out 40 to 50% of their earnings in dividends to shareholders over time. They'll be releasing their Q2 quarterly report tomorrow on May 24th. Analysts will be expecting earnings per share of $2.37, which is right in line with last year. Taking a look down below, we did have a couple misses earlier this year by a few cents, but they have a fairly solid track record of hitting those expectations. Ahead of this earnings report, we currently have 8 analyst ratings. And the BMO stock currently comes in as a strong buy with 6 buy ratings and 2 holds. The analyst average price target comes in at $105, which would be an upside of over 20%. We even have some ratings within the last couple of weeks, a couple holds that still has some upside potential, and recent buys as well. Third up, we're taking a look at Agnico Eagle Mines. Their stock trades under the ticker AEM on both the Toronto Stock Exchange and American exchanges as well. Currently priced at $53, they are up only a couple percent overall on the year, but have seen some solid growth of 18% in the last quarter. Agnico Eagle is a senior Canadian gold mining company producing precious metals from operations in Canada, Finland, Australia, and Mexico. They have a pipeline of high-quality exploration and development projects in these countries. In 2020, they produced over 1.7 million ounces of gold and 3.5 million ounces of silver. Their one flagship LaRonde mine has been in operation since 1988, and their Canadian Malartic is one of the largest gold producers in the world. They also have a solid dividend track record as they have been declaring a dividend for 40 years, since 1983. Their current quarterly dividend is 40 cents per share for a dividend yield of 2.82%. Their next ex-dividend date is coming up at the end of the month on May 31st. Agnico Eagle reported their latest earnings at the end of April, where they came out with some solid results. They also had the company's best quarterly safety performance in 65 years. They reported revenue of $1.5 billion and earnings per share of 58 cents came in 11 cents ahead of analyst expectations. Their stock currently has 10 analyst ratings and comes in as a unanimous strong buy. The average price target comes in at $60 per share, which would be an upside potential of 14%, and a lot of those ratings coming in with the last few weeks following that earnings report. On the low end, we do have a buy rating, which we've already surpassed in price, and then we have others ranging from 3% all the way up to 37%. And fourth on our list today, we have Canadian National Railway. Their stock trades under the ticker CNR on the Toronto Stock Exchange, but we do have a different ticker down here in the States, trading under the ticker CNI. Currently priced at $116 per share, the stock is currently up 5% overall this last year. As the name indicates, Canadian National Railway is a railway transportation business. Their 20,000-mile network spans Canada and Mid-America, connecting the three coasts from the Atlantic, Pacific, and Gulf of Mexico. The company is Canada's largest railway, but does more than just that. With over 40 distribution centers in North America and 23 intermodal terminals, they also offer trucking and marine services as well. Canadian National Railway has 26 years of consecutive dividend growth. Currently paying a dividend of 59 cents per share on a quarterly basis, they have a dividend yield of 1.88%, and that next ex-dividend date is coming up on June 8th. At the end of April, the company came out with an earnings beat, and their next earnings report will be coming up near the end of July. Analysts will be anticipating earnings per share of $1.46, a slight increase over last year. At the end of April, they had earnings per share of $1.35, coming in 7 cents ahead of analyst expectations. The Canadian National Railway stock currently has 19 analyst ratings. And things are a bit more divided here, coming in as a moderate buy with 8 buys, 10 holds, and 1 sell. The average price target of $134 would be an upside of 15%. We most recently had a rating come in yesterday with a hold and an upside of 7%. We do have that sell rating from 20 days ago with a slight downside, and then some buys and holds in between with upsides from 9 to 27%. So there we have 4 Canadian dividend stocks, all with significant dividend track records if you're maybe looking to shake things up with some geographical diversification. Of course, these videos are never a suggestion to buy or sell any specific stock. They're just meant to maybe spark some new ideas and kickstart your own research and due diligence. Make sure you're always sticking with your own investment plan. If you made it to the end, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.